Good morning. I hope you're doing well and welcome to today's edition of 600 Seconds of Trading. It's June 18th, 2018. We're going to take a look at the markets. I hope you had a good weekend. I hope you had the opportunity to maybe check out some of the games. Of course, it's the World Cup. I haven't really seen that influence the markets in any major way yet. But yeah, good games. We're going to take a look at the markets as we usually do at this time of the day. And we're going to take a look, of course, at things like the euro dollar. We're going to take a look at Bitcoin, gold, DAX 30, and crude oil, I think I mentioned as well, right? So those are sort of the markets we look at here at the live trading room. I mean, if you're watching this on YouTube or maybe on Twitter, then please bear in mind that we host these webinars Monday to Friday here at the live trading room. And it's free to join. Just click here to watch the presentation or the recording, depending on if you join me live or not. And if you have any questions during the live webinars, then you can send me a message here via the just with the YouTube account. As well, if you like the video, don't forget to hit that like button, and as well, don't forget to sort of check out the technical analysis section, because if you like this presentation, then I'm sure you'll like this as well, because there's small technical analysis here that could help you to potentially become a better trader. Okay, let's begin, and we'll begin by taking a look at the euro. So the euro and the dollar in general is doing some excellent work. On the back of the ECB rate meeting, the euro dollar collapsed, and that caused the dollar in general to gain. Here is the dollar index, DXY, and this is a daily chart. And you can see how the market is trading sideways between this June low, and this is the high here from November last year. And if we take out this push to the upside, we'll have a further gains in the dollar. That would translate into lower prices in the euro dollar, lower prices in the pound dollar most likely, and probably lower Aussie dollar and New Zealand dollar. So we want to keep eye on the dollar index. At the same time, you know, we're still trading sideways here. So this market, I would argue that it probably needs to go back a little bit, and it could technically just start trading sideways, which would translate in our euro dollar outlook that the market just, you know, say goes up to 1676 and then, you know, trade sideways from there, and then might even, you know, push to the upside. But in the longer run, I do think we're gonna head to the downside, and keep a close eye on the May low here in the euro dollar. If we take out that level, I think it should be relatively straightforward for the market to reach 113.12, maybe all the way down to 111 before the end of the summer. For now though, the market, as you can see, is clearly oversold in the short term. And if you take a simple Fibonacci from this high, which is my trend defining high, and this low, then you'll get these three levels. And I'm looking for a little bit more than a correction to the first fib. This is the 50% correction level, and this is the 38.2% correction level. And I'm looking for this market to head to the upside. Up here, the risk reward ratio is respectable. Initial risk is going to be 180 pip. If we head down to the low, we make 158 pip, and obviously if we continue to break it down, so we'll hit lower. The alternative here is that we don't actually move, we just trade sideways, and then something happens and price just tick out the May low, market goes down and up, and sort of reverse into some downtrend like this. Bitcoin prices, well, Bitcoin is not that difficult to sort of, you know, have a view on this one. The market was, you know, took out this April low, and hasn't managed to continue to decline. But as long as we trade, not actually, but because we did trade below this level, it does open up for a decline towards the February low. And, you know, depending on how you look at this, if this is some sort of a triangle, then you know, theoretically, I mean, we should be able to decline even further. This is a $500 decline, $5,000 decline. Actually, just look like this. This is a 43% decline. Look like that, because otherwise this will project that we're gonna go, well, way lower. But how many percent was this? 42 minus 42% takes it down here. This is definitely within this is definitely reasonable. We're just trading here. It's a 10 below here, so it's not like a big move for cryptos. And this sort of outlook will remain intact as long as we sort of trade below this high here, because this is the high from the breakout day, which is June 10th. Well, yes, June 10th, and you have that high here above that level. This sort of major outlook could easily sort of continue, and we'll see further decline. So long-term picture is bearish, even in the short term is bearish. Last week I said keep an eye on 71.02, and I said if we go up, then probably just gonna sell. So far it's looking all right. I think we can reduce the key level a little bit for this short-term setup, and focus on 69.62. So up here, I think traders are selling. The risk-reward ratios are not good, because when you sell something, you can only make 100% return, whereas you you could lose a limited amount. But this is $460 potential risk. Maybe if we go down, we make 509.89. So, and obviously, if it continues to trade lower and lower, then yeah, you can potentially keep this and just trail the stop loss. But yeah, definitely bearish. No reason to buy right now. Short term and long term is bearish. Here is gold. You might remember gold was trading sideways for quite some time, and we said if we trade up, it might be turn bullish. If we trade to the downside, turn bearish. I had a quick move to the upside here last week. That did not hold. Instead, we had a massive decline across most metals. I'm a little bit surprised, to be honest, but it happened. And instead, we had a resumption of that bearish trend. So I did put a tweet on that on Twitter, of course, that the market looked to head to the downside, and it did move lower. And I think if the market would bounce back to the breakout level, I think traders will most likely sell again. And as long as you're below the May 25th high, this trend is bearish, and there's no reason for us to change our outlook. Here is West Texas, and West Texas took out this level down here. This level was the 64.87 level-ish, and I said that a break to this level would mark the resumption of the downtrend. Now the new trend defining level, this is the level up here, and the position has gone into our favor, or the view. And I think if the market would bounce back up to this level, I think traders will once again sell up here, and then the market will most likely just continue to trade to the downside. Okay, so I continue to maintain a bearish bias in crude oil, and the new trend defining level is up here. And you know what's really interesting? This new trend defining level is just above the former trend defining level. So I found that quite interesting. And yeah, bearish below this level, no change to the bias. Just selling up here, risk of 3.6%. If we go down, you make 4.84, which is okay, and hopefully move to the downside. Here's your German DAX, and your German DAX a bit sluggish. You have trade wars. The US came out with new sanctions on Friday, or tariffs, sorry. And the Chinese were quick to retaliate, so they're literally going head to head now. And it's not, as I understand it, not massive amounts that they're these sort of effects are not going to inflict massive amount of pain, because they started out with sort of smaller amounts, but obviously it can escalate. Now here's the DAX, obviously I guess a little bit depressed on the back of those news. And technically, we took out that high here, the market pushed to the upside, and in the short term, the trend is bullish above this low. And I would argue that as long as trade above this low, this market will probably head to the upside. But I'm not extremely optimistic on stock markets. I did book profits last week, I was trading the S&P, and I was trading the US 2000, so the Russell 2000, but this is the S&P, and you can see here how the market struggled to take out and overcome these highs here from March, and this is February, and the market is now most likely trading a little bit lower, and it could potentially be an opportunity to look to get involved at 27.45. Russell 2000 as well. I wouldn't really call it the same as the S&P because there's no highs to your left, but it had a bit of a nice run here. I traded from 16.36 all the way to the upside, and I guess a little bit moved to the downside, and then we'll see what happens afterwards. Now, with this information, I would be a bit careful, getting involved here with the DAX, but technically the trend is bullish above this level, and the primary motivation for this breaking to the upside is that the ECB is gonna be slow to increase interest rates. Another great benefit is right now that the euro is going down lower, which makes it more interesting or cheaper, to buy products from these 30 big German companies. Okay, that's today's market update. Good morning, Antonio. Thank you so much for joining me. I hope you're doing well. Hope you had a good weekend. I was watching the Mexico-Germany game yesterday. A very fun game to watch. And hopefully we have some more action like that. Spain, Portugal, of course, was a really good one as well. So I hope you guys had some good opportunities to watch some games. The games will obviously continue today and for the next week or two. Hopefully that's not going to influence the markets too much, but I guess it could be a little bit quieter, but I'm not really taking that into consideration right now. Okay, I think we're going to wrap things up. Guys, if you liked the video, don't forget to hit that like, and as well, don't forget to share as well. Thank you, and follow me on Twitter, and have a great day. Thank you.